What is going on, YouTube, and welcome back to the ClearCryptos education channel. My name is T. Haas from the Crypto Shop, and of course, you know I brought my man Jay Seals with me. What's going on, brother?
What's up?
Guys, today is just another recap on what happened in the market today. Myself and Justin are trying to collect this position over here at ClearCryptos, where we come out about 2 o'clock Central Standard Time, 3 o'clock Eastern, kind of give you an overview of what news came out today, what things you should be looking at the market today, and kind of how the market reacted to that as a whole, and relate it all back to cryptocurrency. That being said, let's jump into some of the biggest news on the day. If you guys have been following the news, you probably heard about this story here, which is where jobs in July are in 2022 in the chart. Now, the big story on the day is the jobs report number came out today, and the expected number was about 250,000 added jobs. Well, we pretty much 2x that number and added almost 522,000 jobs. This chart right here or this particular information here or data here kind of breaks down exactly where those jobs were increasing at. As you can see, leading the way was leisure and hospitality with almost 100,000 jobs added, professional and business services. So people adding more jobs by either starting their own businesses and issuing services, which was something that the economy really was excited about during the pandemic. It really kind of forced people to start their own businesses and stuff like that. So that kind of makes sense. Healthcare is also makes sense. We just came out of a pandemic, right? So a lot of those people are starting to come back to work. Government jobs are up, construction's up, manufacturing's up, retail and transportation and warehousing is also up. As you can see here, they talk about those numbers, kind of give a pretty detailed breakdown on exactly what happened with those numbers. Now, the question is, why did those numbers matter, right? When you look at the unemployment rate, it dipped back to its pre-pandemic level of about 3.5% in July, below Dow Jones' estimate of 3.6, and tied for the lowest since 1969. Now, most people would read all of this, including myself, and say, well, that's great. The economy's booming, more jobs are coming in. But the market really didn't think so. The market took the complete opposite direction. And later, Justin's going to kind of break down the chart. But before we get into that, I'm going to go ahead and break down why the market reacted the way that it did. Now, if you look at this from a macroeconomic level, right, you look at the jobs reports and you want the unemployment numbers to stay down and you want jobs to increase, but you don't want them to increase at like a sporadic level, right? Because all that does is make sure that everybody has more and more money to spend in the economy. Well, what's the Fed's job right now? The Fed's job right now is to lower inflation, meaning stop the excessive spending. If the Fed is going to stop the excessive spending, the only tool that they really have is their talking piece, right? And then 2, increasing interest rates. Well, if they see these numbers and we're moving at an incredibly fast pace as far as job growth goes, that signals to the Fed that there may be more and more spending coming into the markets. That being said, what is the Fed going to do? The Fed's going to look to raise interest rates either higher or more consistent basis. So what does that do for the stock market? The stock market was expecting maybe a calm down in the interest rate hikes, coming down from 0.75 all the way down to a potential 0.5 or 0.25. Well, when the market sees these numbers, they're being preactive. They're preempting what the Fed may do come September with the reaction that we got today. And Justin's going to kind of go over that reaction. So those are kind of my thoughts. And now we'll go into the charts.
All right, thanks. Let's look at these charts real fast. So if we look at BTC and ETH, we got the report right here at around this 8:30 candle, and you can see this huge overreaction that we got, right? And we know it's an overreaction because we got about 20 minutes of straight selling pressure and then a bounce, and then we basically took off and almost got back to where we were before. So a lot of times in the market, when we get news like this, we'll get either an overreaction or an underreaction to the news, and then normally a calm down period after that where people are able to digest what has been presented in front of them, and they're like, okay, this isn't as bad as we thought. We overreacted a bit. Let's come back to our senses, get back into the market, and let's buy up the dip. And so pretty much that's what happened. We bought up the dip, and now it's pretty much trading as usual. Now, our other big story on the day is actually this guy right here. So the SEC is investigating Binance and all US crypto exchanges, according to Forbes, which is completely insane, right? So the SEC is investigating Binance and every US cryptocurrency exchange. A Forbes report quoting an unnamed source from Senator Loomis' office has claimed the SEC has been ramping up its effort to regulate the digital assets space in recent weeks, including the probes on Coinbase, which I'm sure everybody's heard of the probe on Coinbase, for allegedly listing unregistered securities. The financial regulator faces a battle with the Commodity Future Trading Commission as it attempts to establish itself as a crypto market main U.S. regulator. All right. And so some big things to take away from this article is that the CFTC has maintained authority over virtual currency since 2014. So since 2014, the CFTC has been watching over Bitcoin and all of our other favorite currencies, right? But in recent years, the SEC has made it clear that it wants to hold court over the space. SEC Chair Gary Gensler has warned on multiple occasions that many crypto tokens could qualify as unregistered securities, and last week the agency gave its strongest hint yet that it plans on clamping down on the market. And so we've seen a lot of currencies, especially in the DeFi space, begin to pivot because of this right here, because of the fact that the SEC is going to these companies and saying, hey, you're a security, not a commodity. So a lot of pivoting has been going on. The SEC has charged 11 people behind Forsage in what it called a crypto pyramid scheme that cost investors $300 million. And then this week, the Senate Agricultural Committee introduced a Digital Commodities Consumer Protection Act of 2022. If it's passed, the new bill would see Bitcoin and Ethereum classified as commodities and give the CFTC oversight of exchanges that listed them for trading. So potentially, this bill could stop the SEC from coming in and trying to completely take over digital currency. So it's been a really wild week for the exchanges. There's definitely more to come. We'll follow this bill closely and see if it gets passed. But T-House, what are your thoughts?
Yeah, man. I mean, the big question is commodity versus security, right? Which one are they going to classify crypto as being? The SEC is really, really starting to crack down. And there's more articles that we'll probably go into later today on the crypto shop that we have for you guys. Make sure you tune in 3 p.m. Central Standard Time, because we're going to be breaking down this information, because it's very, very important you understand for whatever crypto you're in, whatever DeFi project you're in, whatever blue chip project you're in, you need to be really digging into these companies to find out if they're within the regulations of the SEC, because when that hammer comes down, that's when you see people speak about some of these projects aren't going to make it. And the reality of it is, if you're not abiding by the rules, you're either going to have to pivot, in some cases completely shut down, or pivot and try to be in line with the SEC has regulated. Because once they lay that hammer down, they might give a grace period, they might not. Or they might just say, we're cleaning out everything and making sure that you're within line. So this is not something to scare you. This is just something to make you be aware of, because it's coming. The writing's on the wall. They're not discussing this for no reason. They're not doing it for their health. It's not a scare tactic. The goal of the SEC is to make sure that our financial institution is as secure as possible. And right now, they don't view crypto as being secured. Therefore, they're going to try to regulate it and make it secure as possible. So those are my thoughts on that.
Yeah, no, I 100% agree. But hey, everybody, if you like this new series that we're doing, this market update series, please make sure to subscribe to ClearCryptos, because we're going to be trying to bang these out every single day for you guys, so you can stay up to date on the most current news that's been happening in the market. Also, if you like the video, please make sure to like it, subscribe to the channel, and we'll catch you on the next one. Peace.
Peace.